Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit Equities. In this video, we talk about 6 stocks where Rakesh Jhunjhunwala has bought and 4 stocks where he has sold during the last quarter. Please watch this video to know more. Now the first stock on the list is TV18 Broadcast Limited, which is available at Rs 36.95 and the face value for it is 2. The symbol for it is TV18 BRDCST. Now TV18 Broadcast Limited, formerly IBN18 Broadcast Limited, is engaged in television broadcasting networks. The company operates news channels such as CNBC TV18, CNBC Awaz, CNBC Bazaar, CNBC TV18 Prime, CNN News 18, News 18, IBN 7 and IBN Lokmat. Now, as is evident from the one-year chart, the company was on a beautiful uptrend for about half of the year, but since then has embarked on a downward slope. Rakesh Jhunjhunwala's holding in the stock has gone up from 2.6% to 2.97% at the end of the September quarter. The company is a mid-cap with a market capitalization of 6,334.56 crores. The EPS of 0.49 translates into a very expensive price to earnings ratio of 75.41 when compared with the industry price to earnings ratio of 25.79. The book value of 22.12, however, translates into a reasonable price to book ratio of 1.67. The company has a debt to equity of 0.4284, whereas the return on equity for the stock stands at a figure of 0.0052. The company does not pay out any dividends, and the promoter holding is a decent number and stands at a figure of 60.40. The 52-week high for the stock is 70.80, whereas the 52-week low is 31.90. The second stock on the list is Jubilant Life Sciences Limited, which is available at Rs 647.20 and the face value for it is 1. The symbol for it is JUBILANT. Now, Jubilant Life Sciences Limited is an India-based pharmaceutical and life sciences company. The company is engaged in providing basic organic chemicals. The company segments include pharmaceuticals and life sciences ingredients. Now, as is evident from the one-year chart, the company was on an uptrend for a few months into the year, but since then has been a stark underperformer. The market cap of the company is 10,308.68 crores, which means that the company is a mid-cap one. The EPS of 18.07 translates into a price to earnings ratio of 35.82, which is slightly more expensive when compared with the industry PE of 28.48. The book value of 141.22 also translates into a slightly expensive price to book ratio of 4.58. The company has a debt to equity of 0.9833, whereas the return on equity for the stock is at a figure of 0.1863. Jubilant Life Sciences has a dividend yield of 0.46, whereas the promoter holding is just about average at 50.68%. The 52-week high is 1,039, whereas the 52-week low for the stock stands at a figure of 586.35. Rakesh Jhunjhunwala's holding in this stock has gone up from 1.26% to 1.57% at the end of the September quarter. Now the third stock where he has increased his holding is Diwan Housing Finance Corporation, which is available at Rs 184.10 and the face value for it is 10. The symbol for it is DHFL. Now Diwan Housing Finance Corporation Limited is a deposit-taking housing finance company. It offers housing loan and non-housing loans. Now, as is evident from the one-year chart, the company did nothing for 3/4 of the year, was absolutely flat, but recently it seems as if it has fallen from a cliff. There is also the stock which triggered the NBFC collapse. The market cap of the company is 5,777.03 crores, which means that the company is a mid-cap one. The EPS of 42.92 translates into a price to earnings ratio of 4.29, which is dirt cheap when compared with the industry PE of 18.33. The book value of 280.30 also translates into a very cheap price to book ratio of 0.66. The company has a very bad debt to equity at 9.6839, whereas the return on equity for the stock stands at a figure of 0.1445. The dividend yield here is 2.99%, whereas the promoter holding is also a below par number at 39.21%. The 52-week high for the stock is 691.50, whereas the 52-week low is 176.10. Rakesh Jhunjhunwala's holding in this company stands at 3.19% compared with 2.76% in the previous quarter. Now the next stock on the list is Fortis Healthcare Limited, which is available at Rs 129.25 and the face value for it is 10. The symbol for it is FORTIS. Now Fortis Healthcare Limited is an integrated healthcare delivery service provider. The company is engaged in establishing, maintaining, operating, running, managing, or administrating hospitals, Medicare, healthcare, diagnostic, health aids, and research centers. Now, as is evident from the 1 year chart, the company has not really done anything throughout the entire year and has been choppy. The market cap of the company is 6,709.15 crores, which indicates that the company is a mid-cap one. The company is not yet profitable, and hence the earnings per share and the price to earnings ratio are not applicable here. The book value of 81.44 translates into a reasonable price to book ratio of 1.59. The company does not pay out any dividend on account of it not posting any profits, and the promoter holding is measly at a figure of 0.24 after the original promoters were forced to sell out due to corporate governance issues. Now the next stock on the list is Escorts Limited, which is available at rupees 569.70 and the face value for it is 10. The symbol for it is ESCORTS. Now Escorts Limited is an engineering company which offers agricultural tractors and construction equipment. The company's segments are agri machinery, auto ancillary products, railway equipment, construction equipment, and others. Now, as is evident from the 1 year chart, the company was on a slow uptrend for the majority of the year. However, of late, it has severely corrected. The market cap of the company is 6,983.20 crores, which means that the company is a mid-cap one. The EPS of 32.86 translates into a price to earnings ratio of 17.34, which is largely in line with the industry PE of 18.70. The book value of 207.88 also translates into a reasonable price to book ratio of 2.74. The company has a dividend yield of 0.35%, whereas the promoter holding for this stock stands at a figure of 40.07%. The 52-week high for the stock stands at a figure of 1017, whereas the 52-week low is 541. Rakesh Jhunjhunwala's holding in this company has gone up from 8.12% to 8.16% at the end of the September quarter. Now, the last stock where Rakesh Jhunjhunwala has increased his holding as of the last quarter is SpiceJet Limited, which is available at Rs 70.30 and the face value for it is 10. The symbol for it is SPICEJET. Now, SpiceJet Limited is an India-based company engaged in transportation of passengers by air. The company is engaged in the business of scheduled air transport services. Now, as is evident from the 1 year chart, the company has been an absolute underperformer and a lot of wealth has been eroded here. This was primarily on account of the high crude prices, due to which the operations of the airline were more expensive. The market cap of the company is 4,214.13 crores, which means that the company is a mid-cap one. The EPS of 5.89 translates into a price to earnings ratio of 11.94, which is slightly cheaper when compared with the industry PE of 13.60. The company did not pay out any dividends, and the promoter holding is a strong factor for this stock and stands at a figure of 60.03%. The 52-week high for the stock stands at 156.25, whereas the 52-week low is 60.60. Now, even though it was common knowledge that Rakesh Jhunjhunwala held this stock in some amount, however, his holdings seemed to be below 1% and hence his name did not appear in the June quarter shareholding pattern. However, at the end of September, Rakesh Jhunjhunwala holds 1.25% in the company as per the latest shareholding pattern. Now, coming to the sells. The first stock on the list is Jaiprakash Associates Limited, which is now a penny stock and is available at Rs 5.85 with a face value of 2. The symbol for it is JPASSOCIAT. Now, Jaiprakash Associates Limited is a diversified infrastructure company. The company's principal business activities include engineering, construction, and real estate development. It's also involved with manufacturing of cement. Now, as was the trajectory with some of our previous stocks, this stock also consolidated for the majority of the year, but of late it has capitulated. The market cap of the company is 1,422.99 crores, which means that the company is a small cap one. It's not yet profitable and hence the earnings per share and the price to earnings ratio are not applicable here. The book value of 42.47 translates into a very cheap price to book ratio of 0.14. Since it's not profitable, the company also does not pay out any dividends and the promoter holding is a below average number and stands at a figure of 38.91%. Now, Rakesh Jhunjhunwala's holding in this stock has gone down from 2.06% to 1.13% at the end of the September quarter. Now, the second stock on the sell list is Rallis India Limited, which is available at Rs 166.90 and the face value for it is 1. The symbol for it is RALLIS. Now, Rallis India Limited is engaged in the business of manufacturing and marketing of agri inputs. The company has its manufacturing facilities in India and sells both in India and across the globe. The company's segments include agri input and others. Now, as is evident from the 1 year chart, the company has also been an underperformer throughout the year. The market cap of the company is 3,245.69 crores, which means that the company is a mid-cap one. The EPS of 7.87 translates into a price to earnings ratio of 21.21, which is much cheaper when compared with the industry PE of 33.78. The book value of 60.62 translates into a reasonable price to book ratio of 2.75. The company has a debt to equity of 0.1289, whereas the return on equity for this stock is 0.1530. Now, Rallis India Limited has a dividend yield of 1.50%, whereas the promoter holding is just about average at 50.09%. Now, Rakesh Jhunjhunwala's holding in this company has gone down from 9.67% at the end of the June quarter to 9.41% at the end of the September quarter. Now, the penultimate stock on the list is Lupin Limited, which is available at rupees 855.15 and the face value for it is 2. The symbol for it is LUPIN. As is evident from the 1-year chart, the company had a vertical fall a few weeks into the year, but since then has been choppy. The company is a large cap with a market capitalization of 38,669.34 crores. The EPS of 31.40 translates into a price to earnings ratio of 27.23, which is largely in line with the industry PE of 28.48. The book value of 349.08 also translates into a reasonable price to book ratio of 2.45. The company has a dividend yield of 0.58%, whereas the promoter holding is just below average at 47%. Rakesh Jhunjhunwala's holding in this company has gone down from 1.95% to 1.79% at the end of the September quarter. Now, the final stock where he has sold is Anant Raj Limited, which is available at rupees 33.75 and the face value for it is 2. The symbol for it is ANANTRAJ. Now, Anant Raj Limited is a real estate company engaged in the business of construction and real estate development. Now, as is evident from the 1-year chart, the company has again not created much wealth and has been an underperformer. The company is a small cap with a market capitalization of 995.95 crores. The EPS of 1.21 translates into a price to earnings ratio of 27.89, which is much more expensive when compared with the industry PE of 20.71. The book value of 140.45, however, translates into a very cheap price to book ratio of 0.24. The company has a debt to equity of 0.6646, whereas the return on equity for this stock is a figure of 0.0151. The company has a dividend yield of 0.71%, whereas the promoter holding is a strong factor at 63.49%. Now, at the end of the June quarter, Rakesh Jhunjhunwala held 3.22% of the company. However, the September holding indicates that he has sold out or has reduced his stake below 1%. Now, friends, please don't consider these to be recommendations on our part. This and all other content that you see on our channel is intended to be a piece of news. Thanks for watching, and if you have not yet subscribed to this channel, please consider doing so.